Hi ETM. Today we have here with us Fahad Mir, who's going to be speaking to us about audit innovation and the future of assurance. So let's start off with a little bit of an introduction to yourself. What do you do at PwC and what is a typical day like at the firm?
Yeah, of course. So what I do at PwC is that my primary role is a manager in the assurance practice in the Oakville office. I have a client base that's pretty diverse, all the way from technology companies to an automotive company, public pharmaceutical companies. So I spend a lot of my time auditing my clients and providing business advisory services to them. Typical day is very difficult to answer because, in my opinion, I've been there for about 6 years now, and I can truly say that no 2 days have been the same. So aside from my manager assurance role, I'm also one of the national faculty instructors. So I go across the country teaching accounting, auditing, soft skills, interpersonal skills, instructing materials to associates all the way to managers across the country. So, and then on top of that, I do a lot of interviewing as well. So once or twice a year, I help out with the whole campaign that takes place, interview new associates, summer students, co-ops, full-times. So as you can kind of see, like no 2 days really are the same. Like there was a month where I was in Vancouver pretty much for a week teaching. The next week after, I was in Amsterdam auditing. The week after that, I was back here for an audit committee. Then I went down to the U.S. for another business meeting. It just kind of shows you the diversity and how what you kind of learn in a textbook. And when you think about accounting, you don't think of it being so exciting and so interesting. But in fact, when you're actually part of the game, like it's a lot of fun. It really is.
Interesting. So what exactly is an audit? How would you define it in the simplest of terms?
Defining audit in the simplest of terms may not be so simple because there's obviously a lot that goes into it. But in the simplest of terms, when you audit a set of financial statements, you're pretty much wanting to ensure that the set of financial statements are not materially misstated. So pretty much if I'm a bank or if I'm an investor looking to invest in a company, if I pick up those set of financial statements, I can trust the numbers that are within those set of statements. So what an auditor does is they provide assurance services to make sure that those numbers are in fact accurate. And when a reader picks up the set of statements, they can blindly rely on those numbers.
Okay. So what skills do you think are absolutely key to having a good quality, a high quality audit, and to have it be successful?
Yeah, so I mean, a quality audit is probably what every audit team strives for. In my opinion, there are three really important skills that an auditor needs to encompass. The first and foremost, it's your bare bone technical knowledge of not only accounting but also auditing methodology, because it's evolving every month, it's evolving every week. Standards are changing, auditing standards are changing, accounting standards are changing, so you have to stay on top of your technical knowledge. But here at PwC, like we always have, like for example, from an auditing perspective, my least favorite part of auditing and accounting is in fact the technical stuff. I find that to be very dry and very boring. So what I like about the firm is that there are actually a whole bunch of resources that we can tap into. So I can reach out to someone in our accounting consulting services team and ask them, hey, help me out with this complex accounting issue. Or there's online materials we could always read. So there's always resources that can help us out with our technical knowledge and material. The second important skill that an auditor needs to encompass is professional skepticism. So that pretty much means that when I enter my client's offices and the building, and then the client provides me a set of trial balance or draft financial statements, I need to understand what's management's bias to screw around with those numbers, for example. So for example, if they provide me a trial balance, it says, you know what, Fahad, accrued liabilities is $50 million. How do I know that it shouldn't be $60 million or $70 million or even $10 million or even $1,000, right? So in order for me to really deliver a quality audit, I need to have a very questioning mindset. And for me to know that, like I have to understand the client's biases. Like what is management's incentive to, for example, are they trying to increase their bonus payout? By increasing the bonus payout, are they trying to inflate their accrued? You know, there are a lot of concepts that we need to consider as part of a quality audit, and in order to be very skeptical as well. But most importantly, I think the skill that is utmost required as an auditor is your interpersonal skills. So again, when I mentioned that in order to deliver a quality audit, we need to be very skeptical, we need to have technical knowledge, but in order to have those two together, we need to be very kind of, our interpersonal skills need to be up there. So at PwC and in any other accounting firm that provides assurance services, we don't sell inventory. Like PwC doesn't have inventory or products that we sell. What we literally sell are relationships, right? So at the end of the day, we issue like two sets of paper to our clients that says, hey, your financial statements are not materially misstated, but behind that are a lot of kind of hours that are spent with the client itself. So in order for us to really understand management's biases and in order for us to deliver a quality audit, we need to understand the company. We need to understand the business. And there's only so much we can understand by doing online research. A lot of it really comes down to talking to the client and getting to know them on a personal and professional level as well. Mm-hmm. So that's why interpersonal skills, in my kind of opinion, is probably the most important skill to have. Mm-hmm. And that's what truly differentiates one firm or one auditor from another, is how they build that relationship with their client.
Okay. So it's often said that audit quality is a difficult measure. Why is it so difficult, and what are some areas that can be improved upon?
Yeah, so audit quality, as I mentioned before, quality is what an auditor always strives to achieve and hit. It's really difficult to measure because the definition of quality can be very subjective. Mm-hmm. So your view on quality is very different than my view on quality, which is very different than whoever's view on quality, right? So that's why it's so difficult to measure, because when I pick up a set of financial statements or when I pick up an audit file and I look at your approach and how you audited something, I might critique it and say, hey, you could have improved quality this way. But what I kind of understand about the profession and what something that I've actually been through is that there are a lot of checks and balances that take place on our own files. So for example, we have an internal PwC team that on an annual ad hoc basis, they can pick up anyone's audit file and critique it. And then pretty much say that, hey, this is what you should have improved upon from a quality perspective. We also have the CPAB, where CPAB is the Canadian Public Accountability Board, where they, on an annual basis, choose public client files and even some private client files and pretty much see if it didn't meet your quality standards. And it's so important because if you recall this whole Enron scandal that took place, there was no quality in that audit. There were no checks and balances. And Arthur Andersen was actually one of the top 5 firms alongside the Big Four. And a billion-dollar firm pretty much fell into pieces because of one audit that was not driven through with high quality. So that's kind of how important quality is.
Okay. So there's this going concern that perhaps companies are making use of non-GAAP measures to kind of portray their position in a way that may not necessarily be accurate. So do you think auditors need to focus more on the KPIs and the non-GAAP measures of company?
100%. And that's a fantastic question. I mean, as I mentioned before, just auditing a set of statements and auditing numbers on a standalone basis without understanding the entity really doesn't make any sense. Because if you don't understand the business, if you don't understand the risks involved in the business, there's no point in auditing their set of statements. So, because you really won't be addressing those risks when you're auditing. So, in the audit process, we start off with a planning phase of the audit. In the planning phase of an audit, before you even go on site at the client, you're supposed to be identifying the risks of a business. You're supposed to be identifying the areas of the audit file that you want to be focusing on. That could be risky. That could be subject to management judgment as well. So we spend a lot of time in those respective areas. It's very difficult to say that 100% of the times auditors get it right, because at the end of the day, auditing is still driven by human judgment, human error, and there could be 1 out of 100 cases where perhaps an auditor may not have picked up on a small non-GAAP measure that the client kind of slid through the sheets. But at the end of the day, we use a very risk-based approach. We're not looking to pick up fraud. Like, that is not our mentality as financial statement auditors. What we're looking to make sure is that although fraud could be prevalent, although management may have certain biases, we have to keep those in mind, but inherently ensure that the numbers on the set of statements are in fact truly representative of the business itself.
Okay. So one of the first things that we're taught in audit class is that an auditor must remain completely independent of their client or pretty much any other party that may be involved in the engagement. So the question is, how do you communicate to the clients that you understand their business processes and you respect their professional judgment and convey to them what needs to be done while maintaining that positive auditor-client relationship?
Yeah, so that's a great question as well. I think one of the most difficult part of, I guess, this profession and what I do on a daily basis as a business advisor is to advise the clients on what is right, what I think is right, but also respect their point of view as well. So driving home what I think is right from an accounting, auditing kind of measure versus what they think is right can be very cumbersome and can be very difficult as well. From a concept of independence, I mean, at the end of the day, we have very strict independence guidelines, both at the firm and also that we're bound by from like the CPA Code of Conduct. We can't be swayed by any sort of financial or non-financial measures provided by the client. So, for example, one of my clients is a large chocolate manufacturing company. I can only take home a certain amount of chocolate at the end of the audit, such that my independence will not be impaired. There are other instances where there was a technology company I was auditing, and they offered me free gifts, like free laptops, free TVs and stuff, and I raised that to the audit team, and that's something we can't take home because that's going to impair our independence, right? So keeping independence first and foremost in your mind, again, comes back to my second audit skill that we need to Encompass, which is professional skepticism. The second our independence is impaired is the second our skepticism will be impaired, which is when the audit quality will completely fall into shambles. So, but I think that really does tie back down to the relationships you have with your clients. So as long as your relationship with your client is professional and they understand your point of view and you understand theirs as well, there's no reason why you can't reach to a mutual agreement with a certain accounting measure or a business aspect.
Okay. So how do you think the role of the auditor is changing in today's society?
Yeah, and this is something that that's always talked about at the firm. The way I like to approach anything in life is putting myself in the other person's shoes. If I was a client that's paying X amount of dollars to PwC or any other accounting firm for assurance services or advisory services, I would try to think, like, what am I looking for, right? Because there's a client of mine that would pay us, say, $1 million for an audit of their financial statements. All we provide to them at the end of the day is, as I mentioned before, 2 sheets of paper that say, hey, in our opinion, your financial statements are not materially misstated, done. So at the end of the engagement, after 3 or 4 weeks of endless hours of work, after millions of dollars have been spent, both by the client and by ourselves, all we're providing them are 2 sheets of paper. And I think about it from the client's perspective, I'm like, what are they getting out of that? So are they really paying $1 million for 2 sheets of paper, or are they looking for something else? So in my opinion, the auditor's role in society and in the business world for my clients is changing, where they're not really looking for us to be auditors anymore, they're looking for us to be business advisors. So that's kind of the interesting part of my role as well in the private company services area at PwC, where my clients aren't looking at me as just their auditor, they're looking at me as, like, for example, one of my clients had a job posting for a financial accountant position at his company. And he said, Fahad, can you review my posting to make sure it's in line with what the industry requires? Or Fahad, can you review my website and tell me, is this like, am I driving home the message correctly for my products? Or Fahad, like, I'm having some issues with certain personnel over here. Like, where do you think my business should be in the next 5 years, type of thing? So they're not looking for me just for accounting advice, but rather business advice in general that I should be able to give as long as I'm not putting myself in any sort of independence issues with them.
Okay, so let's move on to audit innovation. Last year, PwC's data auditing tool Halo was awarded the Audit Innovation of the Year award. Now, it claims to be able to identify high-risk business transactions as well as process inefficiencies, but for somebody such as myself, I really don't have any experience with data tools in the past that have been used for audit and assurance services. Yeah. So how exactly is it different and more innovative than some of its competitors, and how does it achieve what it claims to be able to do?
Yeah, that's a fantastic question. Clearly shows you've done your research on PwC. So this, I'll tell you one thing. So having graduated university 6 years ago, I can tell you that what you learn in a textbook versus what you apply on a daily practical working life basis is very, very different. Mm-hmm. I've probably used, and I've asked a lot of people the same question, I've probably only used 10 to 12% of my knowledge that I gained in accounting, auditing, statistics, calculus courses at university, and the rest of my accounting knowledge actually came from learning on the job itself. Mm-hmm. So when I was learned about CATs, so CAATS, so computer-assisted auditing techniques or tools, similar to yourself, I would always question, like, what are those? Like, how do you even apply those on a daily basis, right, on a job? And being on the other side now, I can tell you that it's very different than what you learn in a textbook point of view. So we actually have this team called DMG, so the Data Mining Group, which is also supported by our RAS team, so our Risk Assurance Services. They lead this whole HALO process. And by definition, if you think about the word HALO, it pretty much means encompassing everything, like one-stop shop pretty much, right? The protection of all things. So what this tool really allows us to do is, as I mentioned before, quality of an audit is really defined on how you identify risks of a business. And one of the risks we are always required to, there's always one significant risk we're always required to address as an auditor, which is the risk of management override of controls. So that's pretty much the auditor going into a client and knowing that there's a risk that management is trying to screw up the data or the controls in place for their own personal benefit. So what Halo allows us to do is test, for example, journal entries. A very simple example. So as part of our required audit procedures, imagine you're my client and I say, hey, like we're required to test your journal entries. Now there are two ways I can test it. You can provide me your data dump for the entire year that's going to have 1 million transactions in there, all the debits and the credits and whatnot, right? And I can get that dump and try to make sense of it in Excel. But obviously if there are 1 million rows in that Excel spreadsheet, like how can I make sense of that data? But what Halo allows us to do is you'll feed me that data, I'll put that into our software, and that software will slice and dice that information to make it more meaningful for myself. It'll tell me exactly who's been posting entries during the year. So has James complained to me that he is facing a lot of overtime, and when I run Halo, he has the highest number of manual entries posted. So he's been posting 1 million entries that are like $5 in range, and that raises a lot of questions to me as well. Like, why is he posting so many entries? Why is the dollar value so low? And I can report that to upper management and say, hey, James' morale is so low, and a reason could be is because look at this Halo dashboard. It's showing that he's been posting a lot of entries that are very low dollar value in nature. But it can also provide you a lot of risk measures. So, for example, I can set characteristics that say, for example, can you spit out any entries that are credit to revenue, but debit to like some sort of expense account? Or can you spit out any transactions that are credit to revenue, but debit anything else other than cash and AR, which is your typical kind of revenue transaction? And what Halo will do is it'll automatically sort and slice and dice that information and say, hey, Fahad, based on your risk criteria, these are all the entries you should be focusing on that could be risky in nature. Mm-hmm. So that's what Halo really allows us to do, is get that information, slice and dice it to our own kind of meaningful sense. And what I like to do, remember, you're always trying to drive home quality. You're always trying to drive home that business advisor mentality with your clients. What I like to do as part of a closing meeting agenda is include dashboard analytics from our Halo tool. So the client doesn't know that, hey, or the client may know that, hey, PwC is using Halo, that's great, but what does it really look like? Mm-hmm. And until you show them what the software can actually do, they're very, very impressed. So what I like to do is show key characteristics. So for example, who's been posting entries, what time have they been posting entries, what are the dollar values of all the entries posted, which like financial statement line items have been targeted with the highest number of manual entries. So it's a pretty powerful tool, and I can completely understand why we're kind of leading the industry with that aspect.
Okay. All right. So audit and assurance basically deals with past or historical information, and in theory, there isn't really a way to provide high assurance about the future. So do you think that the future of audit and assurance as we know it now is for us to shift the focus to providing assurance about forward-looking information, and how can that be achieved?
Yeah, that's a great question. By nature, the term, you can't really audit the future because the future mm-hmm. hasn't taken place, right? So a lot of people are sometimes turned off about the role of being an auditor, and I think about it myself. Like I'm thinking about that the world is moving ahead at such a rapid pace. But as auditors, we're always focused about history. Like we're always focused about historical financial statements, what's happened in the past, right? And unfortunately, from an auditing standpoint, you can't really provide an opinion on budgeted or forecasted information. But I think that the role, as I mentioned before, of the auditor is really changing, where you may not be able to provide assurance services on future forward-looking information, but you can always provide for example, your independent business insight that's not bound by, I guess, for example, like an engagement letter on forward-looking information. Because the one thing we want to make sure is that we don't want to say, hey, company X, do this, and in 5 years, X, like you'll generate X amount of revenue. And then if we say we'll provide you an opinion on that, they can always come back to us and say, hey, like so-and-so firm, like you said this would happen, but this didn't happen, now we're going to sue you for like $10 million, right? So that's why it's a very tricky situation. And a lot of that role really does lie in, for example, management consultants. Like at PwC, we have a huge consulting arm, a team of management consultants that provide exactly that sort of services to the clients. Where the client says, hey, I'm currently here in the business world. I'm currently here in my stage of the business. I'm trying to get to this level of revenue by this year. Help me get there. and then PwC consultants will lay out a roadmap, lay out a plan, and present that to management, and that's it. Then management has the option to take on that advice or not, to completely disregard it. That's completely up to them.
Okay. Okay, so in recent years, drones have become immensely popular. The assertion is that if you integrate drone technology into our audits, they're basically going to be faster, smarter, and safer. So what exactly do you think that's a feasible proposal, and do you think that, what kind of industries could that be applied to?
So I'm trying to think about it from a drones perspective. Unfortunately, drones, I guess, in our daily life, like, they're not looked upon as, I guess, a positive thing if you look at the world news and whatnot, right? Like, drones aren't looked upon as positive things. But Amazon, like, for example, is completely changing the view and on drones, where they're actually delivering products using drones in today's world. From an auditing point of view, I'm not sure where drones can fit in from an auditing standpoint, or how it can really help out to deliver a quality audit. But maybe that's something that can be looked upon in the future. But I just don't see a place for drones currently in the auditing environment at all.
Well, when I was reading into it, they said that it could also depend on the industry that you apply to. For example, the farming or the infrastructure industry.
Right.
Kind of use them to gain, I guess, validation and evidence of the existence of, say, inventory.
Excellent.
But yeah, so definitely not specifically in the financial industry, because, if you're auditing documents, then you can't really use drones for that.
Yeah.
But yeah, I think it depends more on what industry you're looking at.
Yeah, so that's a great point. So I'll give you a very simple example. If a client of mine is a forest company, and the forest company has inventory on hand, such as trees, right? As part of your required audit procedures, if the inventory balances material, you always have to count the inventory. But obviously, as a human being, you really can't go in a forest and start counting trees and verifying. You can do that. You can verify existence that way. But as you're mentioning, drones could be very, very helpful over there, because you can deploy a drone, take it up abroad, like that area that the company says is theirs, and actually verify to see whether those trees exist or not.
Okay. So let's move on to artificial intelligence. What is PwC's current take on it, and is it being actively integrated into the firm's service lines?
Yeah, so from PwC's artificial intelligence perspective, I know we're heavily investing in AI technology. And again, that's something that our consulting practice is taking the lead on. But I mean, AI in the world today, in the business world, is rapidly growing. The need for it is rapidly kind of growing as well, and the demand for it as well. What AI, in my opinion, is really doing is providing what is, I would say, kind of routine data, routine information that is now being processed by artificial intelligence for them to absorb that data and spit it out in a more, they're pretty much taking data, turning that into information. But you really can't do that with things that involve human judgment. So it really is a battle on the sort of information you're feeding to AI technology. But it's something that we're rapidly investing in and seeing how it's going to benefit our clients in the future.
Okay. So according to a report released by the Brookfield Institute for Entrepreneurship and Innovation, nearly 42% of the employed Canadian labor market is at a super high risk of being affected by automation in the next 10 to 20 years because of these technologies, for example, artificial intelligence and advanced robotics. Now, they further go on to define different risk levels, and the financial auditor and accountant occupations have a very significant risk, with a 94% probability of being severely impacted by automation within the next 10 to 20 years. So what is your thought on that?
Well, I hope to retire within 10 to 20 years if that's the case.
Don't we all?
But to be very honest, I mean, having been in this profession for 6 years, I can see certain aspects of it being automated in nature. For example, the process of getting financial information, picking out your samples, setting up a template, and documenting responses in those templates for like invoices you receive, payment like support and stuff like that. I can completely see that automated. Will that eliminate my role at the firm? Will that eliminate some roles at the firm? Sure, it potentially could, because everyone's looking to make money, right? So everyone's looking to cut costs to make money as well. But what the client's looking for, as I mentioned before, is a relationship with their auditors. Is to ensure that, as I mentioned before, like the auditor role is not really seen upon just as an auditor, someone that's going to test my balances, but rather someone that's providing business insight and business advice. So someone that's a business advisor to the clients. Computers really can't do that. Computers can't provide that human kind of interaction with clients, and computers really can't provide some sort of experiential learning, for example, right? So if I can go to a client and say, hey, like I know another client in your respective industry that is doing so and so thing. Have you considered doing such and such? A computer can't do that. A computer will just get information, kind of feed it into a spreadsheet, that's it, but won't be able to go that level step further and use that information and provide meaningful insight to the client on that. So to answer your question, I can see some areas in our firm being affected by that in the near future perhaps, but again, this is all up in the air. We were supposed to have flying cars by 2020, but I don't think that's anywhere close right now. So technology, you never know where it's heading, but I do see it playing a role in the next 15 to 20 years. Hopefully by the time I retire.
Okay, so let's talk about the advantages of these technologies. You're looking at significant cost reduction. So when you say that these technologies can't really provide you the same effect that a human auditor can, what if you're significantly reducing costs, then wouldn't companies want to shift towards these technologies? Would they really care about still having humans on board to conduct the audits and so on and so forth?
Yeah, and then that's a huge debate that has always been taking place in the business world, is the second you start automating all the processes and all the businesses, like you're going to start losing human interaction. I feel like if you think about it, like right now with technology, for example, humans are forgetting how to interact with one another because everyone's so in tune with iMessage, WhatsApp. Like the way we speak on WhatsApp is like the way we type messages in WhatsApp are now the way people are speaking to you, right? So the concept of interaction is completely kind of losing touch with the introduction of technology. For example, what frustrates me the most is when, for example, associates on my teams or in other teams in other firms as well, they'll rather email a client even though they're next door rather than get up and actually talk to them face to face. And this is something that the clients get really frustrated about. They don't like responding back to emails. They like to have that one-on-one interaction because, as I mentioned before, they're looking for someone more than just providing assurance services, someone more than just sending emails out on a daily basis, right? So, I mean, from a technology point of view, it's ruining the way we communicate, ruining the way we interact with each other, but that does come at a cost. So as a business owner, I can see why I would want to automate certain aspects of my business to increase efficiency, but I want to make sure that I understand it from a 360-degree perspective. Sure, it's going to do me a lot of benefit because I can eliminate staff, but the second I eliminate staff and keep some other ones, is that going to put them at risk? And are they in their mind going to think that, hey, my job may be eliminated as well, and their morale is going to be completely demoralized, right? So, and then I would think about my clients and say, hey, like, would they prefer to have human interaction, or would they rather have computers talking to them on a daily basis, right? So it really comes down to the type of industry you're in, the type of service you're providing to someone else, but also the type of service and the level of service that a client's expected of you. If they're happy with computer interactions and if they're happy with dealing just an automated system, sure, go ahead. But and I still believe that in the consulting field, in the auditing field, I don't see this happening in the near future at all.
Yeah, okay. So, well, based on what I've researched, it is happening, and people have said that in the past 6 years, there has been some kind of work done according to like artificial intelligence and everything, but in the next few years, it's gonna occur at a super fast pace. So that's what people are saying, and they're basically promising other people that it will happen at a much faster rate. So the main disadvantage that we're gonna have with that is loss of jobs. What kind of impact do you think that is gonna have on the economy?
Yeah, I mean, if you think about it, loss of jobs means less income for individuals. Less income for individuals means less purchase power by those individuals. Less purchase power by those individuals means they're paying less taxes to the government. Less taxes to the government means that the government can't invest money back into the workforce, can't invest money into the infrastructure. So it's a huge kind of spiral that will take place that will eventually affect the person that implemented the technology to begin with in his or her own company, right? So I think it's a vicious circle. It's great for the short run, but I think that if humans start being laid off for like artificial intelligence and by like automated systems, it's gonna have a huge impact in the economy, and unemployment being so high is never a good thing, as you're probably well aware of as well. So it would have a huge impact, and I still believe that it would impact the person making that ultimate decision to begin with probably the most.
Okay. So basically you're saying that instead of it being a dramatic shift towards a complete digital workforce, it's just going to be a step towards it, and it may not really occur at the grand scale that we often like to exaggerate.
Yeah, I mean, like, the reason why some of this research takes place and the reason why some of these articles start getting really viral is because they're obviously exaggerated to a degree. Because, for example, I'm not going to read an article that's going to say, oh, there's a 35% chance that automation will take place, and I'm like, oh, 35% chance is nothing, right? But someone can come out there and say, hey, like, it's happening at a rapid pace, 90% chance, you're going to lose your job in 5 years, like, unemployment, like, what are we going to do? The world's coming to an end. That's what people are going to want to read. And unfortunately, we're so driven by the media these days in this world that we are kind of obsessed and we're expecting those sort of articles. But if we snap back to reality and understand that, hey, like, where is the world currently? What has the media promised us 20 years ago that would happen right now, and what is actually happening right now? There's a huge disconnect between what we were promised would happen in 2020 versus what is actually taking place in 2020, in my opinion. So that's why I always like to be cautious about forward-looking information. And again, this comes to your earlier question, like, why can we not provide assurance services on forward-looking information? Because it can get very dicey like this, because you think it's going to happen a certain way, but it's actually not going to happen a certain way. But I mean, let's see, like, my take on it is that it's happening slowly, and I can see certain parts of our business, like, I'm not saying it's not happening at PwC, it definitely is, but it's happening in those areas that are not being like, our client is not being adversely affected by the implementation of technology. In fact, that they're enjoying the fact that certain processes that used to take place by human interaction are now being eliminated, where they can just click a button and everything's taking place. But that has not reduced, in my opinion, the employment level at the firm itself.
Okay. So do you think there are any regulatory constraints that are going to be an issue when firms start to adapt these technologies that kind of like aim at protecting human rights?
I could definitely see that happening. There are a lot of different aspects as well. Whether it's the charter of rights, right? Rights and freedom here in Canada. The whole bylaws would have to be kind of redone in order to, like, for example, confidentiality. Like, how are you going to make sure that artificial intelligence, how are you going to make sure that computers are going to uphold confidential information as they have been by human beings? Because, I mean, if you think about it, these days in this world, one of the most prime suspects to leaking information are not human beings, but rather computers through cyber attacks and whatnot.
Exactly.
So it sounds great, but until and unless you start looking at the risks involved, it could be potentially disastrous for society.
Right, so that kind of takes me to my next question. With the humans and the machines working together, do you think that will eventually lead us to a dystopian society or a utopian society?
In my opinion, I think it's going to be right in the middle of those two.
Okay.
I think there needs to be a fine balance between humans and computers working together. The way I like to think of it is that computers and technology is a means to an end, but it's not the end. So what I mean by that is, for example, in order for me to get to my house to here today, I used not a computer, but I used technology. I drove a car to get here, right? That was a means to get here, which is the end. I use a computer to research information, to for example, talk to talk to someone across the country, right? That's a means to talking to that person, but not the respective end itself. So as far as the relationship between humans and computers is always that it complements what the human's trying to do and not take over what the human's trying to do, I think it should fall right in the middle between utopian and dystopian, but I don't ever see it going hand in hand where a human and a computer are going to be so attached that they're going to be living together, for example. It's never going to come down to that. It should always be that the computer should complement what a human's doing, but never replace what a human's doing altogether.
Okay. Also think it depends on, what kind of time frame you're looking at the beginning, because like you mentioned earlier, we don't really have anything to compare it to, like no sort of precedent. So the risks are going to be much higher, but the more we begin to use them and the more experience we have with them, the risks, I guess you could say, would start to kind of decline, sort of.
Yeah, 100%. And I think you've hit the nail on the head over there. It's like with a car. So, for example, certain German cars have a engine where it picks up the driving behavior of an individual. So if I drive my car really hard and brake really hard, it press accelerate really hard, the engine will learn my methodology of driving and adapt to it. It's called adaptive technology, right? So similarly, I think you hit the nail on the head. As long as computers potentially can adapt to what humans are trying to achieve at the end of the day, and kind of mold themselves to what humans are trying to achieve over time, it will really work out. But if it's a short-term implementation where if company X says, you know what, 90% of our workforce, you're gone, we're implementing computers, like who's going to train the computers first of all? Who's going to provide training? Who's going to provide all the knowledge, the transfer of knowledge that now has to occur from humans to the computer? Who's going to provide that? Like, there's so many implications, there's so many risks involved, and there's so many complexities involved that I personally don't think it's that straightforward. And it's, as you mentioned, it's not going to happen in a short period of time, it's going to happen over time. And by over time, I mean like 20, 30, 40, 50 years.
Okay, all right. So back in 2016, one of the big four firms in Australia, they partnered up with IBM to integrate their cognitive technology, IBM Watson, into their service lines with a focus in audit and assurance. So now IBM Watson, it can think like a human, it can learn, it can communicate. So it's basically anything and everything but a human. And they say that it can analyze a whole large amount of data, like you mentioned earlier with Halo, and it can basically identify anomalies and discrepancies. What really struck my attention is that, yes, it's a game changer, and according to them, this technology is here to stay. But when they were going through their hiring cycle, they were strictly looking for people with STEM skills. They wanted, from architects to analytical consultants and so on and so forth. There wasn't really much of a demand for just simple commerce skills, the skills that we are exposed to as students. So what does that mean for us students? Should we really be pursuing STEM degrees or continue taking that traditional route?
Yeah, that's a fantastic question, and having interviewed hundreds of people, having helped out hundreds of people with their resumes and just guiding people in their careers, I can truly say that if all what we do in university is what you learn in a textbook, and you're going day out, day in, just trying to hit that A level mark, that B plus, that B, and you don't care about anything else, you're not going to succeed in the workplace. As I mentioned before, I've only used 10 to 14% of my knowledge that I gained in university on my job. But the rest of the percentages is really the interpersonal skills that I fostered during university. I took part in a lot of clubs. I had a lot of leadership roles. I had a lot of opportunities to do things that were outside of my comfort zone. And the way I like to think about it is that university is a time, it's like an incubator for your human mind and for your personal skill set. This is the time to do things that you're not comfortable doing, such that when it's actually time for you to do those things in a real life setting, you're very comfortable doing it. So the way I like to think about it is you're trying to make yourself comfortable in the uncomfortable zone here in university. So I really think that academics all are very important. The shift right now, like the mindset needs to completely be shift from being so marks focused and marks driven to more so like real life situations, real life scenarios, right? Teaching people soft skills, teaching people negotiation skills, teaching people how to write, teaching people how to talk. Like that's what employers are looking for. They're not looking for book smart people. They're not looking for people that can read a textbook, memorize definitions, memorize concepts, and come down a day or two later and just spit out that information on a sheet of paper. That no longer is that really applicable in the world these days, because as we mentioned before, clients, people are demanding a lot more than just information dump. They're demanding information that's kind of implemented and analyzed in a way that's beneficial to them, right? And unless you practice those kind of skills and mindset here in university, you're not going to succeed in the workplace. So I think it's very important, as you mentioned, to have that sort of unusual, unconventional career path to, for example, the CA profession or the CPA profession. And I would highly recommend that, is to take part in those activities and skills that are not conventional, because that makes you unique and that makes you stand out. And the people that stand out to me and to the firm and to any firm are those individuals that have a story, right? So if I ask you what is your story and all you can share for your story is, hey, I got a 95% throughout university, I'm going to turn my back and be like, hey, you know what, that's great, but I'm going to move on to the person that has a 70% university but has a story to tell, someone that's lived a life that has something to share. So when I put that person in front of a client, sure, that person can hold from him or herself from a technical point of view, but he or she can engage with that other individual from a client perspective. So that's why marks are important, but everything else that comes with life is equally as important as marks, if not more.
Okay, that's good to know. So
I'm not saying aim for the 70%, by the way. 70% was just...
Sure. Okay, so you mentioned that you help people out with resumes and their whole career paths. What kind of skills have you come across that are not necessarily common, but students should now be focusing on?
Yeah, and I mean, from a skills perspective, I think the skills to me that stand out the most are those skills that are used the most in the workplace. So public speaking skills, writing skills. I see a lot of people doing Toastmasters. Like, that's all fantastic stuff, because now when you're in front of a client and you have to explain a difficult situation, or you're put on the spot and everyone's looking at you in the audit committee and it's your time to speak in front of the CEO of a huge hospital, those skills are going to come in handy. Those skills when you were standing in front of 300 people at a Toastmasters club or whatever club, and you had to make a presentation, you're going to remember that you went through that situation back then. Sure, you might have done great, you might not have done great, but you've at least had exposure to such grand skill sort of moments in your life. So I feel like those skills are the ones that come into play the most. I've also seen people that share their passions in resumes. I'm passionate about photography. Here's my website, right? So, for example, photography, like whether it's if you like writing, if you like blogging, whether you like making YouTube videos, whether you have just a web page on all your portfolio on taking pictures, put that on your resume. Like, share that with recruiters, because it's all about being unique and about being memorable. And a lot of people have passions in life that they just keep to themselves and don't share with other people, which is perfectly fine as well. But just remember that you're competing for a position at a firm like PwC against hundreds, if not thousands of other, most likely thousands of people here in Canada, right? So what makes you unique? And these are the sort of skills that would help you stand out aside from your marks, for sure.
Okay. So how can we make current auditors who lack data mining and artificial intelligence knowledge and skills master these techniques that are slowly and gradually going to be made more use of?
Yeah, that's a great question. I mean, a lot of people think of the data mining people just kind of, they're just going in, just picking out data. They don't really have any client-facing roles, and then boom, they're just spitting out the data and that's it, then they move on. So a lot of people see them and perceive them of being people that don't have many interpersonal skills, but that role is completely changing. And all the data mining people that I've worked with at PwC, what we actually encourage them to do is be in front of the client. Don't present the information to us, provide us the information, but come to our meetings with the client and tell the client that, hey, you are the person behind this analysis. You're the person that did all the digging of the data. Explain to a client in a nutshell how you went about doing it. And 9 times out of 10, the client's so impressed that, hey, not only does PwC have another arm that does complete data mining, but this person's comfortable enough to come and explain to me how he or she has done what he or she has done. So I think it's really about putting yourself out there and just putting your laptop away for a couple of minutes and just putting yourself in front of someone else and explain to them what is it that you're trying to achieve and what is it that you've done and how has it benefited the other person as well.
Okay. So going back to IBM Watson, that's a technology that has mostly, at the moment, till now, has been integrated into the healthcare industry and not so much the financial industry. Do you think it's appropriate for us to directly employ something that has been trained with non-financial data to analyze financial information?
Yeah, and I think that comes back to our earlier point where we mentioned it's going to be a gradual process over time. So in order to understand healthcare information, it's pretty simple because, well, I shouldn't say it's simple, but if you feed a computer, like we do it all the time on Google, I have so-and-so problem, these are my symptoms, what do I have? 9 times out of 10, or actually I shouldn't say 9 times, let's say 6 times out of 10, they'll give you the right answer. Like 4 times out of 10, they'll completely exaggerate the situation, but if you feed the computer the right sort of symptoms, it will give you the right sort of answers. And that's what IBM Watson kind of does over time, is that the more information you keep feeding them, the more information you keep feeding IBM Watson, the more adaptive it's going to be to that receptive information and provide you more meaningful kind of insight into that. From a financial point of view, I can see them doing the exact same thing. Feed them historical information, feed them budgeted forecasts, and let IBM Watson come up with a way to analyze historical data and project that computer's insights over kind of future data as well. So I can completely see IBM Watson doing that, but it's going to be implemented over time. I just don't think that IBM Watson can still come in front of a client and engage in a conversation about that meaningful data. As I mentioned before, it's a means to an end. IBM Watson will come back to the human being and say, hey, human being, like this is what I've kind of analyzed, this is what I've kind of done over the past 2, 3, 4 minutes. Now use that data, present that to a client, and help the client understand the message. So instead of the human being spending hours researching the data, IBM Watson will do it in a couple minutes, and boom, you have everything ready to go to present to the client.
Okay. So to what degree do you think professional judgment can be automated?
Professional judgment, in my opinion, cannot be automated. Maybe by 1%. I should never say never, but let's just say 1% likely. The word judgment itself is it's judgmental, right? So judgmental involves human judgment. One could argue that probability, the concept of probability, is also judgmental. So there's a 10 out of 20% chance, or there's 10 out of 20 chances that such and such will happen. So that itself is judgment, that's probability, and a computer can analyze that data, but from a judgment point of view, from the risk of fraud, from risks and assessing those risks, computers and automated technology really can't do that. I feel like a human being is the best individual or the best kind of use of absorbing those risks and identifying those risks and portraying it to society. I really don't think computers can understand judgment or analyze judgment, in my opinion.
Okay, so how can deep learning of financial statement fraud identification be performed if the known number of fraudulent cases is very limited?
Yeah, and that's a great question. I mean, as I mentioned before, there's a separate team that specifically looks for fraud, right? We have an amazing practice at PwC, which is the forensics group. They go into a company pretty much undercover. They had to completely undercover, trying to figure out, hey, is this company committing fraud? And this team at PwC is engaged. For example, if the CFO thinks that the controller is committing fraud, the CFO will engage PwC, saying, hey, forensics team, come in and figure what's going on in my company. And the controller will never know that PwC is there to investigate fraud, but is there just to do something else, right? So, but as you're saying, the known number of cases are very low, but the effect of those cases is very high. The degree that it impacts people is very high. So I feel like as long as we're only as good as our history, right? So as long as you understand all the historical fraud cases that have taken place and use that information and apply judgment, as we mentioned before, apply judgment on your current engagement, that's really the best you can do. But recall that in an earlier conversation we said that understanding the risks of a business as part of the audit plan, which is the first step to an audit process, is the most important thing. Because if you don't have that relationship with the client, if you don't understand their risks, if you don't understand their biases, and you're blindly just looking at numbers, you'll never be able to catch anything over there. But if you keep everything in mind from a quantitative and qualitative point of view, numbers will start making sense. You'll be like, oh, net income is $5 million, but in order to breach their covenant, they had to be $4,900,000. So the risk of them increasing and inflating their earnings by $100,000, that's a risk over there, because now they are showing that they're onside with their bank covenants and not offside with the covenants. And if they're offside with the covenants, the bank's going to call it debt and the company's going to go down under, right? So those sort of things, if you just look at those numbers and say, hey, net income is $5 million, last year was $3 million, great, it increased by $2 million. But if you don't understand the risks in place and the implementation of kind of how those numbers are composed and the risks of and the biases of management, you'll never be able to catch this sort of thing. So having that sort of qualitative understanding and that judgment that, again, we mentioned that computers cannot really integrate as part of their kind of assessment, in my opinion, is crucial to what we do on a daily basis. And even though there are limited number of fraud cases, I think that's a very good thing, because that shows that what we're doing on a daily basis and what, or I should say limited number that have been reported, because there is probably a lot of fraud that goes unreported as well. But I mean, as long as you have that qualitative and quantitative balance when you're doing things on a daily basis, there's no reason why you will not be able to detect it. And if you are able to detect it, it's equally as important to prevent it from happening in the first place. So as part of our recommendations to management, we always propose to them, hey, such and such could happen. To prevent this from happening from a fraud perspective, why don't you think about implementing this control, right? So again, our audit procedures are a lot more than just numbers. It's encompassing everything to do with a business. And that's, in my opinion, what makes auditors kind of so respected in the industry.
Do you have any words of wisdom for students that are hoping to break into the financial industry?
Yeah, and I think to put it very bluntly, the competition's very high. Depending on where you want to go in the industry, the competition's always going to be very high. But if you start looking at competition as the person beside you or behind you or in front of you, you're going to lose focus. You're going to lose sight of kind of the end goal. The way I like to portray and the way I like to see it as your competition is not the person beside you, in front of you, behind you. It's actually the person inside yourself. If you can defeat your competition inside yourself and understand that you're more than what you think of yourself. You can accomplish whatever you set to accomplish as long as you put your mind to it. There's no reason why you can't get that job at the end of the day. So if you start thinking, oh, PwC every year only hires about, let's say, I'm making up numbers over here, but let's say it hires 150 people. In Canada, across the country, there are thousands of people that apply. Am I going to be one of those 150? I don't know. Like, if you start having that sort of mentality, you're not going to get the job. But if you have the mentality saying that, hey, I'm one of those 150 people that's going to get the job, and I'll do whatever it takes, and I'm going to do whatever it takes outside of an academic point of view to get that job, you're more likely than not to get that, to get the interview at least. So it falls into a couple of things. You have to do things that are outside of your comfort zone here at university. So you are more comfortable in the uncomfortable realm of things. So when you're actually put into an uncomfortable situation at an interview setting or on the job, you're very comfortable in dealing with it. Second thing is always try to make a story for yourself. Find a way to share your story. So you always have to ask yourself as a student, what makes me unique from the person standing right next to me? What is my story? And if you don't have a story, then that's a problem, because you need to figure out how can you share a story with someone else, because everyone's looking for a story in the business world, in the recruiting world from someone. So simple stories like, for example, I'm a passionate photographer. I love going around taking pictures of nature, of places I've visited, and I love posting that online and sharing that with the world and explaining the reason why I took that picture and what it means to me. I like that because that's a story that I can then take, and I know that if this person sits down in front of a client, assuming that this person has a good technical kind of being and technically very sound, the client's going to find it very interesting. And back in our earlier conversation, we said that auditing is just more than us handing them a sheet of paper that says your financial statements are materially or not materially misstated. It's more to the client wanting to form a good relationship with their auditors and their business advisors. And those sort of stories are the stories that clients are really looking for, right? So if you don't have a story, my kind of advice is to find your story, find yourself, but just completely realize that your competition is truly just with yourself. And if you can defeat the competition inside of you, you can't ever be defeated by anyone else. So that's my high-level advice to students. No worries at all. Thanks a lot for your interview.